What if I told you Pakistan may be sitting on $1 billion ocean opportunity? After nearly 2 decades of silence, offshore exploration has officially restarted and the scale is serious. If it moves into development, investment could rise close to $1 billion. Now, why is this move significant? Because it comes after years of renewed activity and planning in Pakistan's energy sector as the country looks to reduce its heavy dependence on imported fuel, and the timing is critical. Across the world, currencies are weakening, import bills are rising, and fuel prices are climbing. Much of this pressure is being driven by geopolitical uncertainty involving the US, Israel, and Iran, along with concerns around the Strait of Hormuz. Now, zooming back to Pakistan, the pressure is already visible in its import bill. In the first 10 months of fiscal year 26, Pakistan's petroleum imports crossed $13 billion. In April alone, imports surged 68% year on year and sharply higher month on month. Crude imports more than doubled, and petroleum product imports also recorded strong increases. So, how is Pakistan responding to this rising pressure? It is shifting towards domestic energy development and offshore exploration to reduce import dependence. And within the domestic energy sector, there are already signs of momentum. Pakistan's largest state-owned company, OGDCL, recently achieved the highest ever oil and gas production from a single well in the country's history, and a major operational milestone reflecting improving domestic capacity. The company is also preparing to increase output further as global supply conditions remain volatile. Against this backdrop, Pakistan has launched a major offshore exploration program under the Offshore bid round 2025. 23 offshore blocks have been approved across the Indus and Makran basins, covering around 54,600 square kilometers along Sindh and Balochistan. Phase 1 involves $82 million of seismic surveys and mapping. If results are positive, Phase 2 moves into offshore drilling, with total investment potentially rising close to $1 billion. Key players include Mari Energies, OGDCL, Pakistan Petroleum Limited, and private sector firms including Prime Global Energies, United Energy Pakistan Limited, and Orient Petroleum. Now, this is not Pakistan's first offshore attempt. ExxonMobil and ENI have explored these waters before, but without commercial success. What is different this time? It is stronger domestic participation, a more structured policy framework, and rising economic urgency driven by import dependence. Because globally, energy security is no longer just economics, it is strategy, and Pakistan is now positioning itself within that shift, not as a passive importer of energy, but as a country trying to unlock its own offshore potential beneath the Arabian Sea. If successful, it could reshape its energy future. If not, it remains a high-risk exploration cycle. But one thing is clear: Pakistan is no longer waiting for energy from outside, it is going after it beneath its own waters.